Hello, everyone. Hello, and welcome back to NAREB's North Texas chapter of Realtist creating home pathways to home
Ways to home
ownership.
ownership.
What are we doing here?
Creating pathways to home ownership.
That's right. Trailblazing, creating a pathway for homeowners to follow. I am one of your hosts, Rosalind Booker, Ros B, as Ros B, principal broker, CEO of Arbrook Realty, and director of Arbrook Cares. That's our nonprofit 501c3. In essence, we help more renters become homeowners, and we like to link arms and shoulders and hearts with those people in the community that have the same like vision to do so. I want to introduce the other co-hosts. We are the three amigos, and I just want to get started with a drum roll. Miss Rhonda Hutchison, the
Hel-
loneliness.
hello. Hey, Derek, audience, and everyone that's listening and on Facebook Live, YouTube, all the platforms that we're on. Just want to say hello to you. And I am Rhonda Hutchison, and I'm the lone lioness. And look, this is what I'm doing. I'm growing with passion and power, and I'm here to help you navigate through it. It's a jungle out here, you guys,
Yes.
and we're going to talk about some of those things that's in the jungle today. And and I'm here to help you navigate through it. But I am a residential mortgage lender, and I'm powered by Paramount Residential Mortgage, and I'm doing everything lending. Hey, don't even worry about it. I got it all. I like what do we say? We got a plethora of things that plethora of programs. Look, from investment products to first time home buyer products, down payment assistance. Listen, if you're looking for it, I'm like Lenny. I got plenty. Okay,
Let
I
me
got
find
plenty.
out you rapping.
But listen, I am excited about our show on today and can't wait until we get started. Mr. Chris?
Well, I'm gonna go back to the '80s, the old school. I know y'all remember Grandmaster Flash and the Furious Five.
Uh-huh.
It's like a junk out there. It makes me wonder how to keep from going under.
Going under. Hey, call us. We got a
That's the
solution.
How to
truth.
keep you from going under.
Really?
But I'm Chris Ziegler with the Ziegler Agency Allstate, and I'm so happy to be here today. I serve the DFW Metroplex in the whole state of Texas, and got a whole bunch of things going on. And I'm excited about today's show as well this afternoon. And got some things I want to interject about insurance. Being a lot of questions about insurance and rates, and of course it varies from company to company, but I kind of give people some insight about that as well, on things they might need to look at, and some things, ways they might can some of the things they can do as well to maybe to help control the cost by looking at different avenues. And I'll chime in on that. And I think once again we're so synergistic in everything that we talk about. Everything's gonna be interlinked and go from that standpoint.
That's
Y'all
big
like that
word.
synergistic? You like that?
Oh, I like that.
You came up with a whole new big word. You smart? Yes.
I learned it something for a
Yeah,
change.
I liked it. I like that word.
I tell you, Rhonda, you're gonna have to step it up.
Yeah,
Come on.
I know. I'm gonna have to go back to school.
Well, we just want to thank our president, Miss Laura Washington, for
Hey,
allowing us
Laura.
to be here on this platform to what? Elevate, educate, and just empower not only prospective homeowners, but our community of
Yes,
fellow
ma'am.
realtors, loan officers, inspectors, insurance companies. We need you. We need to hear from you. So if you are going to hear this playback and you have a product or a service or something hot you need to talk about, share, please reach out to any one of us on the platform. You can inbox us. If you have our numbers, you can call, or you can email the email address that is scrolling across the bottom, NAREB North Texas at gmail.com. So we're going to jump right in. I always in this industry know and understand that nothing happens without the money. So we're going to talk to the purse lady, the lady with the purse strings, Miss Rhonda Hutchison. We have been through a whirlwind since January. I'm talking about every week, y'all. I'm just seeing changes in my industry, and we're going to get to real estate in a moment. But Rhonda, talk to us about some of the shifts and some of the things you've seen and some solutions that you have.
And
Right.
before,
Thank
Ronnie,
you,
before you get
Ron.
started, go ahead and pray
Oh,
us in, Rhonda.
Huh?
Before we get started, go ahead and pray us in.
Okay. Hey, bow your heads in prayer. Father God, first we want to just say thank you. Thank you for allowing us another day in your presence of here as just informative, I want to say bodies and people that are being able to reach our audience, to be able to empower, be able to inform, and Lord, just being able to educate. And we just thank you for that opportunity. And Lord, just bless our endeavors, bless our thoughts, bless our tongues, bless everything that we're able to
Yes.
display or be able to just say, to give information to the audience. Let it be used to be able to empower and uplift them and be able to make them become great stewards in whatever you've given to them to be homeowners. And Lord, we just thanking you in advance for the opportunity. And Lord, we just ask you to continue to bless us individually, bless us collectively, Lord, and we're just thanking you in advance. In Jesus' name I pray. Amen.
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 That's beautiful. Beautiful, beautiful. Now you can jump in head first.
Oh, okay. Now I'm jumping in. But Ms. Ross, she's right. I mean, we know that, it's evident. Interest rates have increased. It's been just a little tight out here for a lot of our homeowners and lenders. They recognize that, and there are different programs that are being, I want to say reimagined, because we know Bank of America has come out with their program, and I'm not giving them a shout out. No, Bank of America, I'm not giving you a shout out, but we know that there are programs out there that's helping to be able to make sure that the minority and African American, Black America is being able to actually become homeowners. But then lenders are also stepping in, making changes, making adjustments in lending. And one of the things that, and I don't know if a lot of other lenders, but Paramount Residential Mortgage, and I do have my shirt on if y'all don't.
Oh,
I'm
I love
representing just in
it.
case y'all didn't know. we do
Representing.
I'm representing. We made some changes. We brought back, and Roz said she remembered this program, which is what we call the 2-1 buy down.
2-1
And what
biting.
actually that is that it's a seller's paid program where the seller actually pays a fee or buy down the rate for the buyer to be able to assist the buyer to get into that home with a lower interest rate.
Now, Rhonda, is that through them paying points? Is it discount points?
Exactly. That's what, instead of the buck being a permanent point, when we have bars that are paying to buy down their points, it's fixed, it's permanent. But
Got
this is a temporary buy down
right.
where it's 2% for the first year, and then after that it's 1%. So for instance, if you have, just say you have to qualify. Now you have to qualify for the interest rate, whatever market interest rate is, the current interest rate. So just say, for instance, the interest rate is 6% today, and you have to qualify at that 6%. But
Hmm.
the seller is able to buy down that rate for the first year 2%. So instead of a 6%, you're looking at a 4% to calculate your monthly payment. Okay.
Gotcha.
And then after the next year, it goes down to 1%. So instead of being 6%, the second year is 5%. And then on the third year, it's whatever that qualifying interest rate. That's will be the third year. But don't think about it. That helps the buyer be able to get into that home and be able to maintain that by having a lower monthly payment for the first 2 years.
That is helpful, because people's financial situation could be charged. I mean,
Hmm.
what I mean by that is elevated, or they can plan for, a different income bracket. Do you have any idea today of what a 2-1 buy down costs? Is there a formula or a method of how many points, Rhonda?
No, then it's going to also be based on the bar's credit score. We already know that's going to be based on what the interest rate, what their qualifying interest rate will be, and then that'll be based on whether or not it's 0.25, 1.25. It depends on what their credit score is and all the other criteria that comes with just a normal interest rate in the market.
So, Rhonda, let me ask you this. Do you qualify for the lower rate? I know you said the credit has to qualify, but does that mean the purchase price of the property is qualified at the lower interest rate or at the cap?
At whatever the qualifying, the real, as we say, interest
Ah,
rate. Yeah.
gotcha.
What happens is that the seller buys the point down. It's a percentage. It's a dollar amount, and that amount of money is held in what we call a buy down account, just like an escrow account. And
Mm-hmm.
each month, the service will be able to take that money to be able to buy down the rate on the monthly payment every month. So that's how it's held in an account, just like an escrow account. So whatever that seller's fee or that amount is in an account and it's paid, it's helped to reduce the monthly payment every month for the buyer.
I'm gonna chime in. Like I told you, when you use the word again, the word today is synergistic, and I said how what we do is synergistic, and we kind of interlink because what you're just talking about now is affecting insurance as well. I actually had a customer call me this morning.
Mhm.
It was something about that because she said now the way the house is being processed, like we talk about the debt to income ratios and things of that nature. Now she's calling me too because in the insurance industry, like I said, with Allstate, but it's like that probably with most insurance companies, we do what you call a soft hit, meaning we don't see the actual credit score, but it's a byproduct of the algorithm that we look at. So if you do get it run, it doesn't affect your score. So if you have a 700, it's going to stay 700 as a part of a hard hit, meaning that you go for a bank or mortgage or something like that, and they run your scores, then they're going to get a hard number, your actual credit number, and they could affect your 700 could actually go down. But going back to what we were saying about that was the fact that she was just saying, what can we do to help with the insurance rate? Because I told you, excuse my French, I said, we're the best child of the home buying process. And once again, somebody waited until the end to try to, kind of figure out the insurance aspect of the situation. So now what I'm gonna have to go back and do now is try to figure out, in a way that's gonna be beneficial for the customer, because me, I'm not gonna put anybody in a position, precarious position my goal is to get you in the house and to keep you in the house. And you have some people just trying to make a sale, just to do the insurance and keep it moving. That's not my goal. And I will actually, what you seen me do before, walk away from a deal because I'm only going to do such a deductible at a certain rate.
Right.
And that's one thing I'm going to look at with hers is some of her options for the deductibles and things of that magnitude, because she's aware that she has some issues from the standpoint from a, her credit history. And then two, she has some claims on the auto side, although in the house, more and more companies are starting to look at the auto, even when you're trying to get the home insurance and vice versa.
I didn't know that.
I'm sorry, go ahead.
No, I didn't.
Yeah,
They look at the auto.
They're looking at everything. And people are like, why? When I ask people that, say, hey, give me your driver's license number, blah, blah, blah. What do you need that for? I'm trying to get a home insurance. I said, I know that. But you heard me say this probably, I hadn't said it lately, but most accidents happen a mile or less from the home. You have people who have an accident really in the garage. I had a customer just the other day, backing out their garage, hit their own car going out. I had a customer that recently had, we used to be 2 claims, now it's only 1 claim because they changed our rules, but she messed up her car that she had for 2 days and messed up her garage door. She left the hatch up. And then when the garage went up, when you do that, it messed up the hatch of the car, and not only did it mess up the hatch of the car, it messed the garage up as well. So once again.
But you know what? And I say we, the majority of it. I mean, wouldn't you guys agree? We're living so distracted.
Yeah.
It's a wonder of all the accidents. If one more person posts on social media about their teenager in a rollover accident, I'm like, what is this about? And let's talk about insurance real quick, because our granddaughter is dying for her sweet 16 to get her first car. What does that insurance cost for a female versus a male at 16, and how much is that going to increase? I know we're talking about homeownership, but you cover it all, Chris.
Yeah. Well, I can't say how much the cost is going. I guess you always hear me use that statement. Everybody has their own insurance DNA, but it does cost more for a male as opposed to a female. And one thing you want to look at too is looking at the discounts too, because if the student, a young driver is actually considered 16 to 25. That's considered a young driver. So that's considered a young driver, and it does go up. But what can help out if that young driver has a good academic record? So they have like a 3.0 with us. They have a 3.0 or better. You get a discount. They call it a good student discount. You're supposed to provide documentation showing like a transcript or something like that to show that they have that GPA. If you have it, it does reduce that substantially. So that does make a difference from that.
That's awesome.
Show that you're responsible.
It shows you're responsible. Exactly. Yeah. So that's a huge, tremendous help from that standpoint. But like I said, you cannot give a dollar amount. It's going to vary from person to person. Like I said, I do look at different things like the claims history and things of that magnitude. But, you have those young drivers on there, it will go up, unfortunately.
One more question regarding car accidents. Chris, if an accident was not your fault, But during that little meeting with the police, and you exchange information, but you file under another person's insurance, does that still count on your insurance? Like if you're the one who got hit?
No. In
Okay.
fact, I'm glad you mentioned that. That's the first thing I tell my customers to do. I tell you, if all agents should do this, but if your agent's not doing that, you might need to be calling me. But like I tell people, if you're having a car accident, I don't care if it's on the weekend. I said call two people. Call the police first, then call me. And the reason I want them to call me too, because a lot of times it's traumatic, and sometimes that adrenaline's going. You're not thinking totally. So I want to kind of first and foremost make sure they're okay, but to kind of make sure that I navigate them on what they need to do, taking pictures, getting information, and things of that magnitude. Mm-hmm. And then two, if it is other person's fault, you need to file it on that other person's insurance, not your own, because they're responsible. You might want to do that as well. Ironically, I've seen situations, this happens quite frequently as well, that the person who might have hit you, Roz, is at fault. They'll still call your insurance company and try to file a claim. But what the insurance company's going to do, they're going to call you to verify what happened and everything like that. Then they'll drop it off. But if somebody calls in, they do have to document that the person called in. But once they realize it wasn't your fault, then it'll zero itself out from that standpoint.
Wow.
Learn. Good information.
Live and learn. I tell you, this is really educational this morning. So in the housing market, my goodness, we've seen such a shift. Actually, I went to a listing appointment a few weeks ago. I had talked to the person 2 weeks prior. So in a matter of 2 weeks, the CMA, the comparative market analysis, most probable sales prices that I gave them 2 weeks prior had dropped 30,000 in 2 weeks. And they were just really flabbergasted. They were like, what happened? I said, well, the market has shifted. Now, of course, they were in the higher price point. And we originally thought we were going to be closer to 7, maybe high 6s. And we ended up being 630-ish, 640-ish. And they were really, really disappointed by that. But, even that vast amount was the difference between them moving forward with the purchase to try to upsize. So, what am I saying? Our BPOs, our brokers' opinion of value, our CMAs, guys, they are as good as they are just for that day. We are not appraisers, and, don't wear that appraisal hat. But even when we're doing our market analysis, we should be informing our clients now, the cost of waiting could cost you.
Yeah.
Just like on the interest rate,
rate side,
grass is greener. I know a lot of clients think, we force sale, but I don't do that. But when that interest rate has gone up twice in 60 days, I don't know the formula of every percent that the interest rate rises, that reduces, home buyers' buying power. So what I would say to number one, sellers today, the question is it a good time to sell? My answer is always going to be for buying and selling. Is this your season? Is this your season to realize the equity that you have, either to gain the equity or cash out and sell? I remember umpteenth years ago when we didn't know any difference, know any better, when the 2-1 buy down Rhonda was in effect, right? We didn't know that 8% was high. We were so happy to get that buy down to 7.5 or whatever. And we were like, yeah, let's go, because it was our time to buy. But I'm often asked the question, are we still going to see these double-digit increases in market value? I always like to speak in pictures and parables so people can really understand. I say, this is my best analogy and assessment to you. I say, you ever been on a Big Dipper or on a ride at the fair, and the roller coaster is going up the hill? You're up, and you on the top of that hill, and you begin to dip over. I said, that first little nudge you feel in your stomach where we're going down, I said, I believe that's what is happening. I said, I do not believe we are going to still be on the incline, especially in the higher price tier. When I say higher price, anything over 500,000, let's just say that, right? But that's beyond the median sales price. I said, and it's not that homes are going to really be below market. We're just adjusting back to a place of whatever normal was. I don't even know what normal is after the pandemic. I mean, it's been so long. All I know is over 5 years, we've reached 78% ROI for market value, which is unprecedented. I haven't even heard of that in the history of real estate.
Now, Roz, I got a question for you. I'm kind of curious. Going back to the house you told me you sold.
Yeah.
Approximately how many square feet was that house?
It was very large. It was closer to like 3,800 square feet. Yeah.
And what area was that in?
It was Murphy.
It was Murphy, okay.
Murphy area. Had another situation, just to give you kind of a parallel what's going on. We wouldn't say that we were overpriced in the market, just say we were at the highest tier. We missed the curveball. When I say we, my client and I missed the curveball by a few weeks when actually the brakes were put on and that interest rate started shooting up and people were just freaking out. Well, they ended up having to reduce their sales price near $65,000. And, I can't share what their offer is that they contracted for, but they were like, wow.
You can tell us. We ain't gonna tell nobody.
No. But nonetheless, again, we are seeing some substantial price decreases in the higher tier. And, with over 40 something showings, the feedback that we were getting, because, a house is only worth, I don't care what our market analysis say, it's only worth what somebody's willing to pay for it.
Exactly.
Right there. So in this case, some of the comments, you can do nothing about how a house is laid out. But when we looked at the statistical data, guess what we saw? That in that area, more people were downsizing, not upsizing. And this particular house was closer to 4,000 square feet. And they were wanting one-story homes, not two-story. So, and I think that's pretty consistent overall over the past 5 years of what we have been seeing. The people who are retiring, they don't want more house. They want less house. And, if you like Chris, they got bad knees. No, I'm serious. Just kidding. Yeah. Actually, Chris is in pretty good condition.
Yeah, as a matter of fact, Chris is in better shape
than me and you put together, swimming every day, running every day. Every time I talk to Chris in the morning, he's like, well, I'm working out. I'm like, overachiever. Yes. But that's kind of high level, big picture. The answer to the question is if it's your season to buy or sell, go for it. No, I don't think we're going to still reap double-digit ROI or market value increases. So will you get the same deal on a sale in 12 months versus 12 months later or selling now? I don't think you should. I don't think you're going to see it. I don't think you're going to see it. Why? And then I'm going to punt it back to Rhonda. Texas is still a leader in job creation. We still have less inventory still year over year. People are still moving here by the droves every day. And it's really a little, I'll use this word, funky situation going on because, prices are still up statistically. Sales are down, right? Prices are coming down. There's a difference between prices and sales. But we're still short of inventory. So we're just going to see if we're going to land on our 2 feet. But a lot of people in those higher price points, what we have learned for some of the comments is like, they're like, I think I'm going to wait. This is the consumer. I think I'm going to wait to see if I can get a better deal to see where prices. They're still waiting for these prices to come down.
I'm gonna piggyback off what you said too, Roz, when you're talking about downside. I was talking to one of my customers, because my neighbor this morning, and we were talking about that too. And I've talked to my customers about this as well. People talking about retiring and downsizing, and get your thoughts on this. Like I told people right now, it didn't really make any sense to, downsize. I know the housing is going down unless you have a health issue or something like that. But from a cost standpoint, if you try to downsize from what you have now, you probably be paying more for what you pay for your house. And I've seen that in a lot of situations. What's been your experience with that? And what have you seen, Rhonda, as well?
Yeah, and that was what I was thinking about too, because I know there's a situation where there was, and I think that was one of your family members that talked about downsizing, but realized that the home that they were in was a lot cheaper as far as the mortgage payment as well as everything. The smaller house cost just as much as what they were currently paying in mortgage and as well. So it is, unless it's a health issue or you're just one of those fortunate ones that can be able to find a home, move into a rural area or something where you don't have to drive into work and you don't, unless you work from home, downsizing may be something that may not work right now. That's for some. But one of the things that Roz said, and I agree with her, especially when it comes to sales prices, interest rates, we don't know if the interest rates, we already know that what goes up has to come down. But when that time frame is, no one knows. So do you just wait for the interest rate or do you just go ahead and jump on the opportunity now if you can? Because you think about it, you always can refinance. When it goes down, refinance, get the lower interest rate, but you're going to pay for a home one way or the other. It's going to be yours or somebody else's.
Exactly.
Yeah.
My theory is pay now or pay later.
Right.
Because here's the thing: people are waiting for prices to come down, but as interest rates continue to go up, what did you really achieve?
Nothing.
Right.
Nothing.
Right.
So,
One of the things we talked about earlier, Rhonda, and I'm like, wow, we're coming full circle with some of these loan products. You mentioned stated income. I'm like, I used to think that was a bad word, the way we crashed with some of these products. And so tell us how this is working nowadays and who the product is a perfect fit for.
Okay. I'm glad you asked that question.
Great question.
But they call them bank statement loans. And a lot of lenders and PRMGs, we're bringing those products in-house. I remember when we used to broker those out to brokers because, these are loans, they're called non-QM loans. That means non-qualifying. They're not our traditional loan. You run through DU, you get a DU approval, and they're called non-qualifying loans, okay? And that means they're just not the traditional qualified means. So on a bank statement loan, which is kind of like a statement loan, is that we use the 12 months of your bank statement instead of your income 30-day paycheck stubs or any of that. And that product is good for those self-employed borrowers who have wrote off all of their expenses for the year.
Wow.
And I want to get in, and I'm glad, like I said, I'm glad you asked because I'm actually working with someone now that made the income. I mean, substantial income. But number one, 2020, they didn't make as much because of COVID, okay? And then also in 2020, they had inventory that was left off. In 2021, they had inventory that was left from 2020 that they had to write off as a loss in 2021, as well as a vehicle maintenance that was required. One of the vehicles went completely down. So they wrote off all of that, brought their income, just say from six figure to, we're not even going to talk about what the figure was, right? So, but they were making the money. When I was making the money and they had the funds. So now we just had to switch it to a bank statement loan. Now, bank statement loan is just a little more interest rate. But in this particular bank statement program, there's no MI. There's no mortgage insurance. So guess what? The monthly payment is affordable, even though the interest rate is higher. So this is a great program for those self-employed borrowers who had to, not because you just didn't want to pay the IRS. It's that there was write-offs that were legitimate that you had to pay. And Uncle Sam had his money. So those are the kind of products there.
In that case, is there still that You still need 2 years of banks of tax returns.
Actually, don't. No tax for 12 months. 12
Just
months of bank
Wow.
statement.
statements. Wow.
Bank statement showing that you have the deposits going in.
So what's the
And
debt to income ratio on those?
they're varied. Just for
Okay.
instance, there's some programs that most 45% is going to be really kind of the average,
On
unless
the
you do
back end.
no asset. We have also a no asset program where it's just based on assets that you may have. You may have some property or some other kind of things or some
Wow.
401ks. Yeah, and the debt to income is just a little higher. But on the bank
Mhm.
statement loan, it's 45%.
That's a great change, but the question I have for you: what prompted that change for them to do that? Which is positive.
Right.
What prompted that change?
But bank statement loans have always been around. We already kind of know that,
Mhm.
but they were kind of loans that lenders kind of like PR and Jim stayed away from because they were high risk loans.
Yeah, okay,
Mhm.
high risk.
Yeah,
Gotcha.
yeah,
Okay.
yeah. They were because I'm just looking at your bank statements, let you make the money, and that's it. But you have to have a higher credit score,
Mhm.
and that credit score is 660. If I'm not mistaken, it's a lower credit score.
Hmm.
And then there are some programs that you have to have, like the no asset. You have to have a 700 plus. I think it's seven something, maybe 720. Can't go by memory, but those, and you have to have the debt. You have to have funds. You have to have reserves, and you have to have funds to
Mhm.
close.
I have a question for you too. Now, you might not know the answer to this. We might need to get somebody from Bank of America on here. I'm excited about the product that they have that's coming out. And this is one thing I've heard talking to some realtors and some mortgage people.
No, I'm just kidding.
Some realtors. Actually, I talked to some realtors and even some mortgage people that had made a comment. They said they're excited about it, even though it's another company. But I heard the timelines for those some of those products to go through is going to be kind of lengthy. Have you heard that, or you're not familiar with that?
No, I'm not familiar with it. The only thing that I've really heard about that program, as a matter of fact, I had a particular bar that was had called me about it, and I had pre-approved her previously, and I told her, go ahead and apply for it. I'm here to help you. I'm not here to keep anything to myself. At the end goal is to make sure you're a homeowner.
Right.
And
Mhm.
she did apply for it, but she did not qualify. The interest rate was a lot higher. She didn't. I don't remember the reason why didn't. She did qualify, but instead I qualified for her for 450, and I think they only did 350. And it may be the loan limit. I'm not sure. And this
Mhm.
loan is a conventional loan, and it's a 50%. It's a conventional loan, but there's a 50% debt to income on the back end, and sometimes that may be a hindrance because we're needing to go up below above a 50% on those. So, but it's a great program if you can qualify.
That's what we might need to get somebody on there because they can talk about it. That'd be good. Neat, probably that we can get
Oh,
somebody.
that is.
Yeah.
Yeah.
I agree. No, I agree. I think
Mhm.
it'll be great because if you can qualify, like I told
Mhm.
them, it's a great program if you can qualify because you don't have to be in a census tract area. The home has to be. There is a link that you can go and it'll show you all the homes. It's by county, so you
Mhm.
can find, or if you have an address, you can put in that address, and it will give you if that home is a Bank of America. That program qualifies, and I
Yeah.
forgot the name of the program.
Um, Before I dove into it, any out just high level, I was like, I wonder does this parallel and seem similar to NACA? But I think some of the dynamics are a little
A
bit
little bit
different.
different.
But
Hmm.
No,
anything.
Ron, stop. So you threw something out there. So inform my audience about NACA so they can kind of understand where you're coming from.
Oh, NACA, NACA. Now, very similarly, no credit score is required for this. So, but you do have to go through, an orientation. You have to be able to do community service, basically a certain number of times a month or year. Plus, you have to live in the home a certain amount of time. You have to go through kind of like a debt class. They have to make sure that your debt to income ratio is really low.
Mhm.
But this program, I think, also was a part of BOA's offering. as well, Bank of America.
I wanna jump into that one. There's not a credit score to qualify, but based on the information that was provided to me, I'm not a Bank of America representative, so I don't know the I don't have the paper in front of me. It's that they still run your credit report, they still run your credit, and your credit does dictate your interest rate.
I
Okay,
see. Yeah.
yeah. So, and you can't have any lates within the last 6 months, or you can have more within the last 12 months.
12.
So in essence, you can have more than one late in the last 12. If you do have one, it can't be more than 6 months
Yeah.
since the
Yeah.
last late. And they do look at your credit. And if I'm thinking for collections and charge offs, it is a criteria for that as well. Because I think if that shows as a recent late, even if it's 6 months, that disqualify you. But the best thing is to do is to contact a Bank of America
Yeah.
representative.
And while I am pulling this up, I just want to share, and actually, I have a contact for anyone that wants to write this down. Um, One of my former agents did pass this information along. You can speak with Michelle. Michelle is with BOA. Her direct number is 800-850-7655. Again, that's 800-850-7655. In the extension number, I need you to write this down, 156-3609. Again, the extension is 156-3609. That's a long extension. That is Michelle. She's with Bank of America. If you're interested in reaching out to her to set up an appointment, maybe she'll even do a Zoom with your real estate office or you personally.
All right, that'd be
So
awesome.
to know more about that. So what I'm seeing here in the real estate market is, look, buyers, if you have a home to sell, this will be an opportunity for you to bring back the contingency to sell a home in order to purchase. We are seeing that again. More sellers are relaxing a little bit, recognizing sometimes the best offer is the one that they have to wait on for someone to close on the sale of a home before their home can be purchased. So, again, just seeing some things that we haven't seen anymore. Was it a couple of weeks we had Miss Barbara Mitchell from
Yeah, she's awesome.
Horton on. She provided some great information, and from her mouth to our ears, she's saying that Horton was still building.
Mhm.
Whereas in some regions, let me just tell you, Texas, we're in our home. We should be a whole nother world
Yeah.
because sometimes what happens in Texas is not happening in like California, Arizona, and some of those
Yeah,
states.
even surrounding states. Yeah.
Yeah, we just, when there's a decline, we don't get hit nearly as hard. And
Specifically North Texas. Specifically North Texas.
North Texas, yeah, we're still
Mhm.
very much thriving. And Rhonda would agree. Some lenders, they're not really wanting to be in the business of taking houses back. There was so many things that we had in place that we didn't have before because a lot of economists and everybody's saying this is horrible. It's going to be another 2007 and 2008
Mhm.
epidemic. And, thus far, we just have not seen the fallout with,
Mhm.
I
there
don't think
was,
it's gonna happen. Like I said,
yeah,
especially maybe back up, not in the North Texas area. Then you've heard me say this on numerous times. I said the North Texas area is not predicated on one industry. You got your tech here, you got your factories, you got entrepreneurs, you got all these corporate offices, entities are still moving here to Plano and Frisco.
still moving,
And they're
still
still moving here. So that's the reason they're moving here. That's the reason I don't think you were talking about the roller coaster analogy, kind of up, 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 up. I think we're like right here. It's gonna do like that. I don't see it doing like that. It might do like this, but how the roller coaster kind of hesitates for a minute.
yeah,
Mhm.
right there. That's where we are.
Yeah, it's just
And
like
then just take a little dip. You think it's
yeah,
going to go take a big dip, but it just
Yeah,
like
they kind of come back up.
go back. Yep.
That's
right.
how I feel about here.
And even personally, I mean, I
Yeah,
have, especially my classmates, oh, you're in Texas, and I'm thinking about moving to Texas, or my daughter has moved, and now or my son, because I have actually someone contacted me yesterday just to give me how I like Texas and what area I was in. They wanted, the daughter had moved to Garland, and they're going to move, and she works remote, and so she just wanted to know my opinion and how things were, and have another classmate.
You tell them you need to call Chris Ziegler to get that insurance.
Yeah, I did. I had to call Chris Zeigler also.
That's right.
Yeah.
Rhonda, who's your agent?
Some bald head man. Oh, Chris.
Yeah, y'all real easy on each other.
Yeah, Chris is my agent. But,
I'm glad you mentioned. I was going to mention this too. I'm glad you mentioned about Barbara and what you talked about earlier as well. And we had talked this prior to the call. People are talking about why the insurance rates going up. With pretty much all the insurance companies, they kind of based on what you just said earlier, inventory being low. So when the inventory is low, and one of the reasons the inventory is low, supply chain issues, meaning getting materials. We talked about this on many occasions, materials and things of that nature. So it's hard to get materials to build a house. So if something goes wrong and something needs to be replaced on a house, you still got to have those same supplies. So
you never think about it like that.
And people don't think about it like that. So that's a huge situation right there. And then of course, anytime we have weather related stuff, but the biggest thing right now too, like I said, insurance or homeowners insurance is going to go up every year regardless. And I'm going to explain to you about insurance. People don't realize it's called pool risk. And when you meaning that, say if you with a particular insurance company A and you live in Frisco or Murphy or wherever you live, and you with this particular company, that particular company has a lot of their insurance having problems, the insurance rate's going to go up. And the unfortunate thing about how insurance works, because it's pool, people are like, I hadn't had a claim ever. I've had insurance for 30 years. And even if you don't have any claims, it's still going to go up because it's pool risk. So you might not ever have any claims, but if the area you're in, if the company you're with have a lot of claims in the area, you're still going to feel the repercussions. And you've heard me say this on many occasions as well. And the reason it goes up pretty much anywhere, especially here in North Texas or anywhere, is the weather related, because we know every year we're going to get hailstorms. Not if, it's when and how bad. And unfortunately, being here in the DFW Metroplex, the hail season is technically March, like mid-March to end March to June. But here in Texas, we get hail.
Yeah.
In January. You might go winter storm.
It's November and it's hailing. No.
Exactly. And going back to that, when we had Snowmageddon back in February 2021. People don't remember this. You might remember this. We were sub-zero degree temperatures. Next week, it was 80-something degrees. The very following week. And we were having tornadoes and hailstorms like that Thursday and Friday. The very next week. Week prior was 0 to 7 single-digit degree. And then the very next week, in Texas, how's it going to be? You don't know. It's going to wait to see what's going to happen.
You have to wait and see what happens.
And that very next week, we were 80 degrees. Talking about a 78-degree differential difference in less than a week.
Yeah. It's crazy. It's Texas. So, one thing I love about our team, our group, is our focus and love for community, which segues me into making a few announcements. I know, Chris, you're always doing something in community. Rhonda, we see you everywhere. One of the things that I mentioned before, I was a director of Arbor Cares. We're going to be participating in the North Texas Giving Day, which is going to be on the 22nd of this month. And what we have identified is those organizations who come alongside prospective home buyers and provide subsidy or down payment and closing cost assistance, because our heart is to be, a part of that bridge from the lower to the middle class so that they can own a home. Right. So we are partnering with some of those organizations, and what Arbor Cares would like to do is provide a complimentary home warranty, otherwise known as a service agreement, to those new homeowners. And, I know somebody may say, well, that's not very much. Yeah, it is. It is a lot, because I know it's going to sound like I'm talking out of both sides of my neck, but let's flip the switch. For the people who are only qualified for something in the low 200s, mid 200s, even right at 300, it is still a dogfight out there for those properties. So maybe not 50 people want the same property, but there still are multiple offers on the lower tier, that lower pool. So how does a home warranty help? In two ways. Number one, it gives that buyer security that their major mechanical systems, at least they're going to be wondering, hey, who the maintenance man going to be? Well, if your AC or your hot water heater or your dishwasher go out, you have someone to call. So that's a peace of mind and security. Second, it's going to sweeten the deal for a real estate agent and who's negotiating that deal. So we don't have to ask the seller to pay $500 for a home warranty. That may be the very term in that contract that could be the deal winner and not the deal breaker. So we want everyone that would hear this to come alongside. Hey, if you can afford to pay for a home warranty, please donate that as a gift. We'll be posting something online. You're going to see us flood social media. You can start today, even if it's as little as $10, $15, $25. Give something. That is your tax deductible gift. Chris,
hand down, Chris.
Old school church, raise my
you in
hand.
church.
But now I'm gonna piggyback on what you said too, and this is gonna help you out from an insurance standpoint as well, because people are getting calls all the time. Chris, my AC went out, and people don't realize insurance companies only do cover losses. We don't do things that are like mechanical or maintenance type situations. So that's another reason you should have a home warranty, and definitely make sure you take advantage of what she's talking about, because I get calls all the time. Well, my AC went out. Okay, what happened? I think the Freon, this, that. That's not, the insurance doesn't cover that. You have to call, AC guy or somebody to do that. And that's when those home warranties, I tell people, that's when the home warranty comes into effect.
That's
If
right.
this broke down or this happened, if it's mechanical, if it's breakdown, if it's maintenance issues, that's what you need a home warranty for. Because people always come. It's always good to call because you never know unless you ask. But that's what the home warranty.
We need to do actually a show or extended class on that.
Yeah.
What's covered under home insurance, homeowners insurance, and what's not. That way, people can understand where they need to fill in the gap. And then if they need any umbrella insurance, I think we need an insurance class. Chris,
with the home warranty. And you want to know what? That's right. Because and that just made me think about it. I actually talked to one of my bars that I closed last month, and she called me because her dishwasher, actually called me because she's getting all this mail from all these scammers, this kind of home buyers protection insurance and all of these things that come out the woodworks when you close on a home. But she received something from her warranty company, which I told her was valid because I went and looked at her contract and said, yes, that's your warranty company. But she had a problem with her dishwasher went out. And she called them, and it was just going to cost her $75 for a service to come out. She's used that, and she hasn't even been in the house a month yet. So that's why it's very important. And she's an elderly lady who's on a fixed income. And that's very important to have that home warranty. So kudos, Roz.
Kudos. And that's another thing too. That's why I tell people all the time: contact your insurance agent if something goes wrong. Don't call the 800 number. You've heard me say this a jillion times. Call your insurance agent, because if you call your insurance agent, first of all, we're going to look at your deductible, because if you don't meet your deductible, it's going to throw out a number. If you have a $300,000 house, you have a 1% deductible. That's $3,000 deductible. If you call the insurance company directly and they say, hey, come out and take a look at my roof. They come out and take a look at your roof. Mr. X, you only have $1,500 worth of damage on your roof, but we're still going to charge you zero pay claim. Most insurance companies do. They have to do that if they have to document that they came out. But too many zero pay claims can still be detrimental to you in the long run, or maybe in the short run, depending on how many you get. And I think you heard me use this example before. I had a customer call me in. I was getting all excited, like, ooh, because we look at insurance scores, and this is one time with us. You lower your insurance score, the better it is. So with us, and I'll say, you want them to be low. Low insurance score means you're going to get a better rate. Higher, not as great. Guy called in, he had a 1, which was, I was excited, like, oh, went to go look at it, said reject. I'm like, what the heck? Why is it getting rejected? And then he had 6 zero pay claims on there. I called him up and I said, Mr. X, I said, you had 6 zero pay claims. I said, why did you call the insurance company so many times? He had the right rationale, the thought process. He said, Chris, I always want to make sure that my property was okay and nothing was wrong. I thought it was the right thing to do. I said, you had the right thought process. You were calling the wrong people. That's why you should call your insurance agent so we can get you in touch with somebody or make a suggestion that you go look for a roof or a contractor to come take a look at it.
Mm-hmm.
And when they come out and take a look at it, they confirm that you have significant damage. I had a customer the other day. He found a roofing company. I thought that was
That's Chris breathing.
That's Rhonda roaring with power.
That's it.
But yeah, he did. They had him come out and he said, "Oh, it's substantial damage." So once they told me that, I put in a claim. That you want to have to. So you want to make your deductible first and foremost. That's the first thing you want to do, and then make sure that you have somebody comes out take a look at it to make sure it's okay from that standpoint as well.
You can go ahead and give me my props.
Huh?
Go ahead and give me my props.
Go ahead.
Hey.
She had a situation just recently too. She called me up. I said, "Girl, you do listen sometimes."
Yes, I do listen. I actually called Chris because I actually had a hot water line leak, and I called Chris and I said, "Okay, who's the plumber that I need to call?" And I had them come out before I actually did a claim. So you give me my props because I listened to them.
Those are two high fives.
Yes.
There we go. Yeah. That's what you're supposed to do, And then I tell people, when I say what I mean what I say. And some customers have gotten themselves in trouble. They were, "Chris, I know you told me I could come on the weekend. I didn't want to bother you." I said, "You should have bothered me. Now you have a zero pay claim." That's why I tell people, I don't mind people calling me. I want you to call me. If anything goes wrong, call me, call my staff. If it's on the weekend, my cars, I have my cell phone, I'm on it because if it's a situation like that, I want to be able to know. First of all, I want to know what's going on, so I can be in the loop, but then just make sure we navigate it through the situation properly so everything goes smoothly.
And you're right, because Chris called me at 9 o'clock, want to follow up. I was like, you could have called me tomorrow.
I knew she had a situation. I had gotten busy. She had reached out to me, and I was trying to get back to all my people. I'm like,
look, that's that education and that consultation.
Yeah. No, I appreciate it.
If I would have called her back, she'd be like, "Rod, he ain't called me back. I stayed up until 11 o'clock at night. He still didn't call me."
No,
Exactly.
awesome. Yeah.
It's wonderful. It's wonderful, y'all. Some other great things that are coming down the pipeline. So what y'all should know is your Rise B is on the move. I'm busy serving you, busy serving the community. Now I want all the realtors. I know you need your CE to renew those licenses. And you know what? We can always use a hand up and a leg up in sprucing up our professional development. So many of you may know. If you don't, I'm going to let you know. I partnered with Trevelyan Academy, Capri Trevelyan. She's a professor over the academy. And I will be teaching and instructing in some of the CE courses, like your Legal 1, your Legal 2. As a matter of fact, we have changed it. We were going to meet in person, but tomorrow we actually have a 2-hour professional development course on how to conduct an open house. Now, I know you feel you know how to conduct an open house, but we got some insight and some information and a checklist, things that you can use, tools that you can use to start prospecting for not only listings, but buyers, how to follow up, get them in your drip campaign. So y'all go ahead, reach out to me and register for that class. That's going to be tomorrow. And none other than Chris Zeigler, the Zeigler Allstate Insurance Agency is one of the sponsors, as well as Go Financial Services. Thank you very, very much. But for this September, October, and November, I will be teaching some CE classes, some classes that you real estate professionals need to know. If you need to reach out to me, you can call me at 972-996-4702. That's 972-996-4702, or simply go to this website. It's Ask Roz B, ASKROZ AskRozB.education. AskRozB.education. Miss Rhonda.
Hold on. Roz, is it in person or is it virtual?
It's virtual. We switched it from in person to virtual for all of September.
And before you start with Rhonda, I just want to, if you wasn't aware of this, I want to talk about, give Women's Council a plug. We had a Women's Council meeting yesterday as well. And Women's Council is a subgroup of the NAREB organization. And it says Women's Council, but there are men on in the Women's Council. Well, in fact, I'm actually on the board of that also. But one of Raj and Rhonda, you guys might or might not be aware, but this is Realtor Safety Month.
Oh, okay.
It's Realtor Safety Month, and they had somebody come in and talk about different things about Realtor Safety Month, and what they were talking about. You said when you're doing showings and doing things like that, how you should be prepared and what you should have and what you shouldn't have. They said, some realtors want to floss with the $4,000 bag and the red bottoms, and they said sometimes, depending on what you're doing, you can make yourself a target.
Yeah.
And they talked about a whole bunch of different things, but the stuff they were talking about, all they said is Realtor Safety Month. It paralleled and crossed over to any segment for anybody, but they talked about a whole bunch of different things, as far as what you put on Facebook, your personal versus your business, interlinking the two, and even talking about how you might be dressed in certain things. They get into a whole bunch of different scenarios, which I thought was very good from that standpoint. So not to run over time or anything like that, but I just wanted to make you guys aware of that. It even had a guy who came and talked about personal safety as well, from protecting yourself from as far as I guess hand-to-hand combat words you want to use, to even having
throat chop,
and even talking about using how to use firearms and stuff like that. And in fact, like I said, you gotta be careful with some of these women, because they show some purses look like Gucci or some Fendi's, but had a little compartment in there you can see acting up, And then one lady said that she has a fire holster that she wears, and I have a friend, I know when she jogs, you can't tell, but I'm gonna stand up. You have like a little spandex thing like that.
Yeah,
that she runs, but you can't tell. But I can't remember. She said she carries a weapon in there. And I'm like, one time when she came to my office to do some stuff, she's actually a realtor, and she was talking, and she was telling me something. And then she's like, showed me. I was like, oh, I was like, watch you.
We call it a get back. She had a get back.
But she had one. I wouldn't even know that she had it.
Yeah.
So she was talking about, we got on the subject talking about that real quick, but then, and I said, do you go to the range and stuff like that? She's like, I got it on me now. I said, where? And then she had a thing, she unzipped the little thing, and I didn't know it was there. So somebody better be careful with you. But go ahead. I know it's a round robin time. You did a round eagle. You forget about the round. Okay. That was the vulture.
Y'all stop. Y'all got me looking.
Okay.
Okay, let me introduce. I just want to say one thing real quick. I'm gonna do a real round robin. Is that I want you to remind everybody about my investor solution program that I have for investors. You can be a seasoned investor or a first time investor. This is a great solution for when you're not using your own. I want to say credit score, because it's credit score generated, but your own income. You don't have any income, no tax returns. You can close in an LLC, a corp, sole proprietor. You can close, no property limit. It can be a 1-plex, 2-plex, 3-plex, 4-plex, more. And so just letting you know that I do have that product to simply need run credit and have a lease and an appraisal with a lease supplement. That's all you need. That's all you need. Contact me today so I can help you out. But I'm Rhonda Hutchison. I'm the Lone Lions, and I'm here to help you navigate through it. Give me a call at 214-856-3747. We skipping you, Chris. You
had your chance. No,
I was talking about the Women's Council, but I'm Chris Zeigler with the Zeigler Agency Allstate, located in Frisco, Texas, serving the DFW Metroplex and the whole state of Texas. And if you have any questions about insurance or anything else, financial products, I can be reached at 214-870-4269, and look out for either in the next month or early November. It's going to be that time again for one of those drives I'm doing, so we can make sure we're taking care of our community for people who are in need.
Thank you, Chris.
Well, y'all, we are here every second and fourth Tuesday, high noon, for an hour of power. We will see you in 2 weeks. Have a wonderful day.
All right. Bye-bye. Be blessed. Bye-bye.